resorts and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person. But with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off a Friday here on the Financial Exchange is Chuck, Mike, and Tucker with you. And top story today has been for a while. Hey, Americans, how do you feel about the economy? That's what we're going to be talking about this morning at 10 a.m. We got the latest data from the University of Michigan Consumer Sentiment Index. University of Michigan goes out, and the reason why the University of Michigan does this is actually where a lot of the economic research was centered during World War II. Believe it or not, the University of Michigan Economics Department was one of the leading sources of data about the U.S. economy in order to help really plan the war effort at home during World War II. And that's been something that's just kind of stuck there. They have one of the strongest and biggest economics departments in the country. And one of the things they release every month is a panel of consumer sentiment data. So what we've seen, and this was a story in the Wall Street Journal even before this data came out, is that if you go back to June of 2022, Americans in June of that year, almost 2 years ago now, rated the economy worse in the Consumer Sentiment Index from the University of Michigan than they did during the Great Recession back in 2008 and 2009. They said, hey, this is as bad as we've ever seen it. Remember, inflation was high. You had supply chain disruptions. Those were the problems facing Americans. You did not have high levels of joblessness.
It was furthermore worse than the rating has ever produced. It was worse than 08, but it was also, there's never been a worse indicator since, actually the data I have from the St. Louis Fed is only going back to the late 70s, and I do think they did some surveying back to the 50s. But from the data that I can see here, I don't see a single worse reading than it was in June of 2022.
So, consumers said, hey, this is very bad. We don't like this one bit. And what we saw today is, and there are a few different components that go into this, and we'll discuss some of them. The overall headline reading for Michigan Consumer Sentiment came in at 78.8. That's a jump from the 69.7 reading previously. The numbers don't correlate with anything, so it's not something where it's like, oh, if it's above 70, it's this. If it's above 80, it doesn't mean anything like that. But to put this in perspective, the last time that we had one that was this high, you got to go back to August of 2021. But almost 3 years ago now, 2.5 years ago. If you want a sample of where this has been during some of the boom times that we've seen, prior to the tech bubble bursting in January of 2000, this index was running at 112. Again, I don't know what that number means. It was there.
Hot.
If you look at before the housing bubble burst in 04, 05, 06, it was in the mid-90s. If you look at it during kind of that 2015 through 2019 period, last year or two of the Obama administration and all four of the Trump administration, it was running in the mid-90s as well. So I think it's safe to say that a reading in the 90s is like, yeah, we feel good about this. On the other hand, where we were, the reading in 2022, we got down to, reading of 50. So that was very bad. 78.8 is a little bit closer to 90 than 50, so I would say that Americans now, in this most recent one, and this has been an upward trend since the middle of 22, Americans now are probably rating, on average, the economy as somewhere in the middle. It's maybe a little bit closer to the 90s, but it's not there. It's somewhere in the middle, and I think that is reflective of where we've come since the middle of 2022. The annual rate of inflation has come down, though prices obviously remain high. You still have very low unemployment. This week, yesterday, we also got weekly jobless claims, 187,000, the lowest in a couple of years. So you're continuing to see no signs of employment faltering. Mortgage rates have come down, gas prices have come down, and so it's not surprising that you would see households and individuals overall saying, yeah, things are better than they were a year and a half ago. Your thoughts, Mike?
Yeah, I think that's all logical. The fact that, it is improving. I think the piece that I am just clinging on to here, and granted, this is a volatile data series. It is going to swing around, especially during volatile economic periods like we've had over the last 3 years. But the 2-month surge in consumer sentiment that we've seen here, which is a cumulative 29%, that's the largest 2-month increase you've seen since 1991. That is a abnormally big swing in how people are responding about how the economy is doing. And I think certainly that's backed up by other data points that we see, such as the surge in stocks and such as a number of different things. But that is of interest to me, just how rapidly opinions have shifted about where this economy is going. And I think a lot of that is around the premise of soft landing, the premise of low inflation, and all that comes with it.
I don't know if it's on the premise. I think it's what people look at and what they see. You talk about the things that are very visible for people. Let's talk gas prices. Hugely visible thing. Like you're driving around on any given day and you see where they are. And right now, AAA national average is currently running at 308 and 8/10. That's down about 20% from where it was late last summer. So again, something very visible where you look at it and you say, yeah, this is better. Stock market, very visible. I mean, like you nightly news. Hey, the Dow Jones hit a new all-time high.
Right.
Very visible right there. You get a statement from your 401k or your IRA or whatever it is. Hey, we're getting, back towards, the highs that we saw a couple of years ago. Okay, that feels good. Hey, we're trying to buy a house. Hey, I'm seeing mortgage rates in the sixes instead of in the eights. That feels good. Those are the things that I think are very visible, and it's not to say that when Americans rate the economy, I think this is actually a great conversation to have in terms of, like, what are they actually rating? Because they're not going out and actually, talking to, 2,000 people being like, hey, are you doing well? Like, that's not what they're doing. They're rating it based on what they see in their lives. And so when Americans are rating the economy better, I think it's around those big decisions or the ones that are just very visible, like gas prices. Stocks are up. Great. It's easier for me to spend money on, what I need to. Mortgage rates are down. Cool, I'm going to be able to buy that house that I had to put off late last year. Those are the things that I think we really see. And the one thing that you do always have to watch on this is it can be, dare I say, transitory in terms of, hey, just as low gas prices can give you this little boost here. Well, if oil prices go to 90 because of, conflict in the Middle East later this year and gas prices are back up around $4 a gallon, probably going to see consumer sentiment take a dip as well.
Yeah. I mean, you can see this here in the inflation expectations data that they pulled. The year-ahead inflation expectations have now softened to sub 3%. So, that's been running, I think, in that, 3 to 4% range now for quite some time, and we're down below 3%, which, again, fairly comfortable level, but you can see how rapidly that could reverse itself. We've kind of talked about that all through the end of last year and into the beginning of this year, which is expectations are for perfect in 2024. Will you get it? And this seems like more confirmation of expectations for perfect.
And by the way, remember, all of the data that we've been getting over the last 3 weeks, none of it is for 2024 yet. It's all still the December data. So we don't have a single data point yet as to what's actually happening in the economy in 2024. So how do things actually end up playing out? Don't know. The piece that is kind of interesting to me is, if we talk about that idea that, you have somewhat this perfect scenario priced in where inflation comes down, allows the Fed to cut, but you still don't see, any type of major job loss or slowdown. Quite honestly, isn't that kind of what we saw back in last year? I mean, we didn't get Fed cuts because we were coming off of very high inflation and we're still not where it needs to be. But aside from Silicon Valley Bank blowing up in the very brief scare that gave to markets, wasn't last year about? And I know it wasn't like a straight line. Obviously, last year there were some questions, But if you look at 2023 in its totality, didn't you basically get the perfect scenario last year?
I think by year end, yeah, you could argue that you did. The difference was in that year, everyone thought that you were going to get a worst case scenario. And so, yeah, you kind of got it last year. Now the question is, everyone's expecting a best case scenario. What happens if you don't get it? Or wait, even what happens if you do get it? Right? What if this economy just lives exactly to expectations? What does that mean for everything else?
Well, the thing is, like, sometimes you do get that. I remember back in 2017, it was the first year of the Trump presidency, and everyone was, all optimistic. And you had this story of, the U.S. was going to be going through tax cuts, and you were going to get, this idea of synchronized global growth. That was, the big buzzword that was going around all the investment conferences. And the idea was just, hey, like, the U.S. is just going to absolutely rip this year. And then it did. It did. I think the S&P 500 was up somewhere between like 25 and 30%. I can't remember the exact number offhand. GDP growth was strong. You did end up getting tax reform. And so, like, you looked at it and you said, oh, like, we actually got it.
Mm-hmm.
So just because something is expected doesn't mean that it can't happen. And, like, you don't have to go back very far. That was, 7 years ago that you saw that? And it was something where there was all this optimism, and it turned out to be completely right for that year. So I think that just because people in markets are optimistic doesn't inherently mean that the other shoe is going to drop. Like, it could turn out just fine, and I think that's something where there's a really recent historical precedent on that as well in that first year of the Trump administration, where expectations were so high and the market and the economy still delivered. Let's take a quick break here. When we return, we'll talk about what's going on with home sales right after this.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or You can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It's easy to imagine being a snowbird and moving to a warmer climate for a few months each year, but you need to have a sound financial plan in place if it's going to work. Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you're thinking of buying new property in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, let the Armstrong Advisory Group help you build a solid financial strategy that may make your planning easier. Get your free copy of Armstrong's new guide called Can You Afford to Snowbird by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All right, Mike, what do we see from existing home sales data, not just for the month of, was it December? Yeah, the December data, but what do we see for the full year?
They were abysmal. People didn't really have a lot of homes that they wanted to sell, and buyers found it less affordable than previously. And so for full year, worst home sales really since the Great Recession, 15-year low in terms of total home sales for full year 2023. And I think the question is, does anything about 2024 change that? Certainly, I think sentiment improving helps the housing market, perhaps from a demand perspective. We might end up seeing lower interest rates, but facts aren't in there. It just seems that way because interest rates were so high in the third and fourth quarters of 2023. And so, what that all resulted in was extremely low volume of real estate sales. And I probably don't need to tell this to anyone that is in or attached to the real estate market, whether you're an agent, a real estate, a mortgage broker, or certainly a home inspector, are feeling this pullback quite significantly.
I wonder if the home inspectors are actually doing better than a couple of years ago. You remember everyone was waiving inspections in 2021?
Yeah, I sense that they are probably doing a little bit better now. But still, I mean, when you have this volume of, even if people are, going for the home inspection by and large, you are still looking at very low sale volumes, transaction volumes. So it's still probably hurting compared to where you were in 2019, for example.
Now, what we are seeing, and this is according to data from Mike Simonson of Altus Research, if we look at inventories, we're starting to see signs of inventories building a little bit, and inventory builds typically lead sales because you can't have a sale without inventory out there. So right now, just as an example, according to his data, available inventory of unsold single-family homes rose an additional 1.2% in the last week to 505,000. That's 7% more homes on the market right now than at this time last year. It still is just a fraction of what you saw in pre-pandemic levels, before, 2020.
That's what I was wondering, Chuck, because this piece from the Times quotes, I think, Zillow, saying that new listings were still down 15% from pre-pandemic levels. And it feels, I have no data to back this up, I'm wondering if Mike's does, but it feels to me that inventory and listings are, like you said, a fraction of where they were pre-pandemic. Like half would have been my guess.
Yeah, pre-pandemic, at this time of year, you were typically running 750 to 825,000 homes.
Okay, so you're
available.
At what's
505. You're at like
3/5.
two-thirds.
Yeah,
you're at somewhere between like 60 and 70%, depending on the year.
Yeah.
Also, this week, again, this is all Mike's data. Simonson,
not my data,
not Armstrong. 49,000 new listings this week, 5% higher than the same week a year ago. So you've got a continuing trend where you're getting more listings. It still is something where pre-pandemic, his data was showing normally 60,000 plus listings this week. So you're still running, 20% below pre-pandemic levels, but you're better than last year. And remember, again, inventory leads sales. You can't buy a home if there isn't one for sale. Other things that you are seeing. Inventory growth without sales growth climbing is bad. That's what you saw in the initial 2007 period in the U.S., where everyone was still trying to list homes to get a ton of money for it. And it wasn't until 2008 that kind of dried up when people were like, oh, these houses just aren't moving. So in terms of single-family homes under contract right now, 251,000. That is also up 5% from this time last year. And 5% more new homes for the week under contract this year, 42,000 versus 40,000 compared to last year as well. So right now, you're seeing about a 5 to 7% pretty consistent bump in all activity levels here.
So what do we think this spells then for the housing market? According to Mortgage News Daily, yesterday the average 30-year fixed rate mortgage rate was 6.89%, which certainly feels nice given that it was over 8% back in October. But really, that just kind of puts you back where we were for most of 2023, right? We didn't get into the high 7% mortgage rates until September of last year, and even then it only lasted a few months. So from a cost of capital perspective, I don't think that this exact market spells anything huge for buyer demand. But does that matter? I mean, is there still enough demand out there, even with mortgage rates as high as it is, to keep this thing afloat and keep all these transactions coming?
Well, I think that there's demand there. The question is going to be the price that you end up seeing on this.
Yeah.
And it's not something where you're seeing meaningful price appreciation thus far. Median single-family listing price right now is $420,000. That's 3% higher than this time last year. So listing prices are not, exploding higher because of the recent dip in mortgage rates. I think ultimately my take on this is we'll see where these trends go, but if rates stay where they are or drop down a little further, you've got some real room to run on transaction volume, and transaction volume in housing is what matters for economic activity. It doesn't matter if a house sells for $600 or $650. I know it matters to the person buying it, but in terms of the economic impact, here's what that transaction actually does. You got 5% of the equity in that home going right out to agents. Okay, then they can use that to buy stuff. When someone is moving, they spend on moving costs. They might paint. They might redo a bathroom. They might landscape. They might buy new furniture. They might decide to have another kid. These are all things that are hugely important when it comes to growing the economy. And so the simple fact that I look at is transaction volume is the be-all, end-all when it comes to the economic activity that this generates. Ultimately, if you are looking at a situation where transaction volume goes up 5 to 10% this year compared to last year, it's kind of hard to have a recession with housing growing 5 to 10% in terms of activity. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled, Can You Afford to Snowbird? Mike, people think about the big expenses when they're trying to figure out if they can rent or buy a place down south, but what about the smaller ones they need to account for as well that tend to add up?
Yeah, I mean, certainly when I'm thinking about buying a home down in Florida as the typical Northeastern experience, if you're talking about snowbirding, you're aware of the purchase price. You know you're going to have property taxes, but the other items do sneak up on you. We've been talking a lot about how insurance market in Florida has gotten a little bit crazy. Those costs get substantial very, very quickly. But other things as well, right? Just because you're not there doesn't necessarily mean you can cut out your entire internet connection or cable bill, or the fees for trash pickup might be built into the association that you belong to. And so really adding up all of these different factors is important if you're going to make a permanent shift like this of maintaining two properties.
And other things you have to factor in as well are travel to and from, and even travel while you're down there. Will you bring a car down there? Are you going to be buying a new one for that new location?
Right. Prepare to pay thousands of dollars each way if you plan on shipping your car back and forth, which honestly can be more affordable than owning two cars with the insurances and everything else that goes along with it, but you have to beware.
Our guide this month is titled, Can You Afford to Snowbird? And there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The stocks are extending their gains from yesterday's rally to close out the week, driven by optimism around several chip makers, including NVIDIA, AMD, and Taiwan Semiconductor, in addition to Apple's biggest one-day gain since May of last year. At the moment, the Dow is currently up by 47 points, S&P 500 is up by 9, and the NASDAQ is up by 1/3%. Russell 2000 is off by 5 points, or just under 0.33%. 10-year Treasury yield up by 3 basis points, now at 4.17%. And crude oil up 1% today, trading just below $75 a barrel. Spirit Airlines stock is rebounding today, up 23% at the moment, after the budget airline said it anticipates revenue for the fourth quarter to come in on the high end of its earlier outlook due to strong bookings. The company also estimated operating expectations will come in better than expected. Spirit stock recently plunged 62% week to date after a federal judge blocked its merger with JetBlue. Meanwhile, shares in iRobot are plunging 29% after the Wall Street Journal reported the European Union's competition watchdog intends to block Amazon's $1.7 billion bid to purchase the Roomba maker. And Hertz shares down by 5.5% after Jefferies slashed its price target and downgraded the stock to hold from buy, noting that EV repair issues and depreciation expenses will limit the company's near-term profitability. Last week, Hertz announced plans to sell about a third of its EV fleet and instead reinvest in gas vehicles. I'm Tucker Silva, and that's Wall Street Watch.
Mike, just continuing on housing briefly here, there's a piece in the New York Times. It's got the title, "Is This Really, quote, the worst time to buy a home?" And it feels an awful lot like we've basically had this question asked every year since 2009.
Guarantee we saw an article like this in 2019 when it turned out to be a really good time to buy a home.
Even before that, I remember in like 2013 and 14,
Yeah.
people were like, oh, like prices are up so much in the last few years. Like, what if there's another housing bubble that's built?
Sure.
Like, those were conversations I was having with people.
Yep.
And it's kind of like the idea that, you know, every day you wake up and your life is getting worse. Like, it's just hogwash like that. I just don't understand how it can always be the worst time to buy a house. It kind of ignores everything.
Fair. Yeah, I mean, the only piece that I would be interested in looking at to compare these different periods of time, just to negate some of these, would be I'd be interested in looking at, you know, we've talked about the rental versus home ownership costs index, if you will. And I would be interested in looking at, like, how did that compare in 2013 to today? Like, does it still did it still show at that point in time that renting was cheaper than owning back then? Because then it's not a really useful index to look at. I think what we have seen over the last year or so is that, you know, according to national data at least, renting was something like 30 to 40% cheaper than owning a home in today's market. And so I can put something behind that at least, because the arguments from the past were just, well, the price seems really high.
But
didn't really speak to affordability at all.
The other thing, if you're talking about, hey, am I going to make money on my home? I have no idea.
Sure.
No one knows. But let me just run this through, you know, kind of a thought experiment here. Let's say you go out and you buy basically a median-priced home in the United States, $400K.
Yep.
You put 20% down, $80,000. So now you got a loan of $320. Interest rate, slap a 7 on it, right?
Yep.
So you sit there and you say, okay, principal and interest, it's about $2,100 a month, somewhere in that ballpark. Go out 5 years from now. And I'm not saying that $2,100 is cheap or expensive. I'm just saying that it is. If this is a place where, like, you actually want to live, and you're not just sitting there going, oh, gee, I hope this goes up in price, because, like, no, this is your home. This is where you're living. So you paid $400,000 for this. You got a $320,000 note out there. Each year, your 30-year fixed-rate mortgage, you chip off, you know, at the beginning, about 2% of your principal. So you get out 5 years from now, and you've cut about 10% off that principal. Your $320 is now like $290, and you say, you know what? Economy went, you know, kind of in the toilet down the road. Mortgage rates now, I can get a 5%, you know, mortgage rate and refinance. So now I take my $290,000, I refi that into a new 30-year mortgage at 5%, and I just cut my payment by $600 a month. do we reflect that anywhere in terms of this conversation about is this the worst time to buy a house? Because this is something that is very much a possibility. Like, one of the things that we never discuss with mortgage rates being where they are for some reason is, and I'm not saying like this is like why you should like overspend on a house, but what I am saying is, hey, if you see the economy go into recession at any time in the future, generally interest rates go down then.
Anytime in 30 years, bear in mind.
Right, and it might be something where you might be able to refinance in a way that actually dramatically cuts your housing costs then, and then your decision to buy that home looks completely different.
I do think that that's the important piece, however, Chuck, because, heck, we're going to talk about an article, and I think be joined by Sarah Foster later in the show, about how generations of people are buying homes to build wealth. And I think if you go into – and that has been undoubtedly the case over the last, 50 years in U.S. history. And if you go into buying your primary residence or your vacation home with the premise of I'm intending to make money on this transaction, then at any point in time it's quite possible that you get disappointed.
But isn't that how it works with any asset?
Yeah, but I can't think of one – well, I guess there's plenty that have been quite as reliable as buying a home. But, I guess that's the case with any investment that you make anytime.
The big thing with housing, and this is one of the things that I will say about it, it's one of the few places where the vast majority of people have the ability to utilize leverage in a way that can be really accretive to them. And like when we talk about home prices, the long-term average for home price growth is like 3% a year. It's not like you expect it to go up 7 to 10% a year. It's not like what we've seen with equity returns. But if you're putting 20% down, that means you're levered 5x, which means that just play this out. Let's say that you used that example before. You bought a home, you put $80,000 down on a $400,000 property. If home prices go up 20% to $480,000 and you go and sell, your equity there, all else being equal, just went from 80 to 160. You doubled it even though home prices only went up 20%. The reason why is you got 5x leverage because you're sitting there with a 20% down payment. So it's one of the few areas where the average person has the ability to really utilize leverage, and that can, again, in up markets, result in some pretty amazing returns. Now, in down markets, 2008, this is also why you had people wiped out. If you are levered 5-to-1, 20% down payment, and 2008 happens, okay, home price just went down 15%. Okay, great. Well, my $80,000 is now looking like $20,000. Except now you're trying to sell your place for, $320,000, and now you got to pay a 5% commission to do so. Your $20,000 now looks like $5,000. You just basically had all your equity wiped out by a market correction in home prices. So leverage can be both accretive in good markets and very damaging in bad ones. But home ownership is one of the few places where people actually get it on an asset because most people are not going out and participating in like a syndication loan for, buying the Sears Tower. Like you can't do it. There's billionaires who do that.
So
I think that's something. So I just think that that's something that is worth noting when it comes to how a lot of people did end up accumulating wealth over the last 40, 50 years. It was through the fact that they were buying with leverage in a generally upward market. The one major, the two examples that really didn't do particularly well there, 91 and then 2008. So there are examples where that leverage can be very destructive, and it's not always an upward sloping line.
By the way, so I mentioned that that index that's been quoted here about how much more expensive it is, the cost to buy a single-family home versus renting one. The difference as recently as the end of 2022 was coming to, according to this one data series, $2,700 a month to buy versus $1,850 a month to rent. That was the kind of the national average that they put together using data from Zillow and many others, Case-Shiller, and that's what people have cited as look at this differential right now. It's never been so severe. And that seems to be true from the data series that I'm looking at. I will point out, however, that pretty much consistently from the mid-1970s all the way through the Great Recession, it was consistently cheaper to rent than it was to buy a home during that entire time period. And I don't know of anyone that bought a home between 1975 and, I guess, 2000 that severely regretted it at any point during that decision. It's also safe to say, though, that the cost to rent in the entire 2010 decade compared to owning in that decade was significantly more expensive. So because prices were much lower in that 2010 decade, I think a lot of people ended up, well, we all know, right? Anybody that bought a home from 2010 through 2018 ended up doing quite well on that.
Now, the other thing you got to factor in is you own a home. Hey, you got to pay when something breaks.
Sure.
You know, Mike, when's the last time you talked to a renter that had to pay $8,000 because a furnace broke?
Yeah, not very common.
No. On the other hand, when's the last time you talked to anyone who owns a home who had to pay $8,000 because a furnace broke?
Whether it's a furnace or something else, quite frequently.
It happens. The roof leaks, the driveway cracks, you got an infestation of flying squirrels. These things happen.
That. Yeah.
I did have that. I had
it's been a while since we've talked about your flying squirrel problem, but yeah.
Yeah. So, again, I always look at, if you're making the decision to buy a home, it should be because you want to live there for at least 7 to 10 years, and you want to basically lock in your cost of living over the course of that time period. That's why you do it, in my opinion. Not because you think you're going to make a bunch of money. If you do, hey, that's great. But you buy the home because you want somewhere to live, not because you think you're going to be a great real estate investor. Let's take a quick break. When we come back, we're talking Taiwan Semiconductor and the latest on a possible government shutdown.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing and Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing and Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing and Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Yesterday, Mike, some of the fastest action I have ever seen from Congress on anything. They learned that there's a snowstorm coming in today. Hey, guess what? Let's do a 2-month continuing resolution to extend things so we don't have a shutdown so we can get out of town before the snow. They did this thing in 3 hours when pushed to do it.
They really are just like us.
In what way?
They just push everything to the last second, and then when pushed into a corner, rapidly realize that, they can just take care of this without all the headache.
So, you ended up with these 2-month continuing resolutions passing the Senate 77-18, the House 314-108. There still is no long-term budget deal in place for the remainder of the year. Still some ongoing negotiations about getting additional funding and border control measures in place, or additional funding for border control measures in place as a condition for additional aid going overseas to Ukraine and Israel. And so this is kind of the state of play right now, as it looks like any potential shutdown is kicked to at least March, so it's not something we have to worry about now, but still no longer-term budget deal in place.
I try and stay in my lane when it comes to political stuff and not really jump in the weeds here, but it seems to me that, when Governor Maura Healey's State of the Union address has to speak about immigration and funding for immigration reform and border stuff, because if anyone missed that, basically the entire income received from the millionaire's tax is going to be spent up in emergency housing alone in Massachusetts, that there might actually be something there. I'm not saying that there's going to be mass immigration reform, but you seem to be having perhaps some states that don't usually have to worry about immigration being pressed to deal with it now, and perhaps that's going to push to some sort of negotiation on it. I'm not sure.
Reading between the lines, it seems like things are fairly close on that front, so we'll see if something is able to get across the finish line in the next couple months on the immigration side of things.
Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased cost of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy the later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Couple different sets of layoffs to talk about. Macy's laying off about 13% of its corporate staff, 3.5% of its overall workforce, and closing 5 stores. They're continuing to try to figure out how to get their business to the appropriate size right now. During the kind of the peak of their employment, they had about 175,000 employees in their 2013 fiscal year. Today, running only about 94,000, so they've already come down about 50% from that high in the last 10 years. That's got to be just... Imagine, like, consistently losing, like, 7 to 8% of your workforce, or consistently cutting that each year for the last decade.
Quite honestly, I'm surprised it's not been more.
I just don't know how you maintain morale there.
Yeah, I don't know. I don't know either on that front, but, like, you think about the transition that has happened to a company like Macy's, and think about all their competitors who have cut significantly more. The fact that Macy's actually has that much left is just shocking to me.
I was also thinking about this in the context of what we talked about yesterday with Google, where Sundar Pichai was like, hey, there's going to be layoffs coming sometime this year, but you don't know when. Like, man, what a horrible environment to work. Like, hey, there's mysterious layoffs coming. Watch out.
Yeah.
Like, no, not fun. Wayfair also announcing they're laying off 13% of their employees, about 1,650. They're being based in Boston probably means that you're going to be seeing some folks out of work that you may know who work there, unfortunately. And I'll just quote here, workers affected by the current round of layoffs will receive email notification on Friday. I know that there's no right way to lay people off, but being laid off by email just sucks.
Sure does, but there have been far worse.
Yeah.
I don't remember which company it was during the pandemic that basically people showed up to the office and their badge just didn't work anymore.
Or do you remember the one where they had, I think it was 2 Zooms, and one ended up being for, like, the people who were kept, and one was for the people who were fired?
Yeah.
Like, it's just...
Or the CEO that cried while laying everybody off.
Yep.
This is so hard for me.
Yeah, and then
no,
posted
it's
to, like, Instagram.
harder for all of you.
Yeah, it's probably harder for the people losing their jobs. But, some additional job cuts coming, so we'll see if that's a trend that continues here. Quick break here. We got hour 2 coming up in just a little bit.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those 2 things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned, and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing and Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing and Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing and Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. It's a little after 11 on Friday, and markets are in positive territory across the three major U.S. indices. Dow is up to 125 points, S&P's up 19, NASDAQ up 88. So the S&P 500 is within sniffing distance of an all-time high on the close. We'll see if it ends up getting there, but we've been kind of knocking on the door for a little while now. We haven't gotten there yet. But just kind of knocking on the door. I believe that the high that we hit was 48.18. We're at 4,800 right now, so we're within 0.5% of a new all-time high on the S&P 500 at the moment. 10-year U.S. Treasury up 2 basis points to 4.16. We got oil up 27 cents a barrel to 74.35 on West Texas Intermediate. National average for gas prices, according to AAA, down 0.6 cents to 308 8/10. And we got gold right now up $6.90 an ounce to $2,028.50. Anything else catching your eye, Mike?
No, Chuck.
Okay, that's great.
Keep it easy.
Let's talk about college.
Let's do that.
Let's just talk about college. You know, we could just do that, right?
No, what we want to talk about is Americans' attitudes towards college, I think.
Oh.
So
that would be more interesting.
There's a piece in the Wall Street Journal today, which, by the way, I've got some criticism of, but I think that parts of it are interesting and do reflect a changing shift in attitudes towards higher education in this country right now. So a few of the statistics that were pointed out right in the first page of the article that I found interesting and not terribly surprising. So in the past decade, the percentage of Americans who expressed a lot of confidence in higher education, that fell from 57 to 36%. Undergraduate enrollment since 2011 has translated into 3 million fewer students on campuses. Nearly half of parents, this is a wild one to me, say they would prefer not to send their children to a 4-year college after high school. And 2/3 of high school students think they would be just fine without a college degree. That's one of the pieces that I want to dive into a little bit more here. But, Chuck, I'm interested in your take on this. You attended, frankly, one of the better schools in the country, an Ivy League college, where I think most who graduated from there would say that the degree ended up being worth the price. But clearly that's not translating to most attendees or most potential attendees or even their parents.
Yeah, and I think that this gets at a couple of different things. And to figure out why we're seeing this kind of, polling about college and the actual, attendance numbers for college, I think the first thing that we need to be asking is, look, what are we trying to accomplish when we send a kid to college? Because it's kind of a mix of a few different things right now. On one hand, it is a place to simply go spend another 4 years learning. Okay, that's fine. On another hand, it is a place that you can spend 4 years away from your parents, for most people the first time in their lives that they're able to do so, and make some mistakes in a place where it's not quite as frowned upon if you do something that you shouldn't because you're still learning. There's another school of thought that college is for preparing people to get a job. And the problem is that we kind of lump all three of these things together, and it's not entirely clear that we're doing a very good job of any of them, because even within colleges, you got different professors and different administrators that think of what their college should be doing differently. And so I think that what you end up with is an awful lot of bloat then, because you try to accomplish all these things, and you end up not necessarily doing any of them particularly well, and the cost goes up because you're trying to do all this stuff and trying to appeal to everyone.
Yeah, there's some embarrassing examples of this, and I think we're all familiar with the power of faculty, for example, in a lot of institutions that just leads to bad results. There was a new president of the Henderson State University in Arkansas, which, the school was in some financial problems. The music department, as an example, had more faculty than graduating students. Tough to envision that having a strong future given those statistics. But in spite of that, when in a lot of cases, when, outsiders try and make changes to these universities, it's fairly easy for faculty and others with vested interest to force that person out instead of forcing change.
So you've got that going on. On top of that, then you end up with the whole student loan debacle where basically you've got pretty much unlimited free money that is heading towards these colleges, and it's inflated the cost because colleges don't have any incentive to compete on price.
Yeah, that cost inflation, the real cost of a 4-year college degree, meaning tuition, room and board, activity fees, all that stuff inflated by 180% between 1980 and 2020.
And then you obviously have all the statistics that, show, hey, historically people who go to college earn more, and so that incentivizes more people to go, even though correlation is not causation. It's not because they went to college that they earn more. It's not like by taking, a college physics course, you're like, oh, like an employer looks at you and says, yes, I'm going to pay you 20% more, Michael. That sounds like a fair compensation for learning physics.
No.
No.
But rather, many, many employers will not even look at your resume unless there is a 4-year college degree on it.
So where we end up here is that colleges have most colleges. If you look at your very prestigious universities, your top 20 to 25 of them, they don't have anything to worry about.
Sure.
Because there's always way too many people who want to attend them and are going to attend them. They don't have to worry about their prices. They don't have to worry about admissions. They don't have to worry about any of that. They can go and basically do whatever they want, and they'll still have a surplus of people who want to go there.
Quite frankly, for good reason, because as we all, because
the thing that you pay for at those schools, it's
the name.
Yes.
And the connections.
It's the name and the connections, and in certain departments, here's the thing, even beyond just those top schools, you can find world-renowned professors at lots of different places.
Sure.
Depending on the department and what you're trying to study, one of the best features of college that I wish people knew about and that they took advantage of, you don't go just to sit in a class with 80 other people or whatever. your professors quite literally are forced and required to offer office hours, where you have the ability to talk to some of the smartest people in the world in whatever field they're in, one-on-one, and they have to talk to you.
Even if you ask dumb questions.
Like, there's no other place in the world where imagine you're a football player, and you're like, oh, I'd really like to spend, an hour of time a week with Tom Brady so that he can teach me more about football. Well, you can't. Like, Tom Brady doesn't need the money, so he's just not doing that. If you go to the University of Michigan, you are going to be in economics classes with people as your professors who end up on the Federal Reserve Board. And you can actually talk to them for an hour. But getting back to the idea of, hey, why are Americans, looking at college and saying, hey, this doesn't make sense? So there was a study that was done by the St. Louis Fed's Center for Household Financial Stability. It was conducted, I think, about 4 or 5 years ago. And what it looked at is, okay, if you go and get a college degree, what kind of difference does it make in your income and your net worth compared to not getting one? And on the income side, and this is they studied this across different generations. They basically looked at people who graduated people who were born in the 1930s, 40s, 50s, 60s, 70s, and 80s. So they looked at like 60 years of data on this. And what they found is there's a pretty conclusive income boost that's consistent across all those time periods. You generally get between a 40 and 60% boost in income by attending college. Like, even for people like me who, born in 1980, attending in the 2000s, okay, you still get, that boost is there.
I'm looking at a chart here from the Bureau of Labor Statistics for 2022, just to give you some real numbers here. They measured data for persons aged 25 and over in 2022, and a bachelor's degree, the median weekly earnings was at $1,432. Those for just a high school diploma was at $853.
So again, pretty consistently, like in that case, it's like a 60% bump.
Right.
But here's the interesting thing. If you look at predicted net worth by education, you go back to people born in the 30s, so they went in the 1950s, their net worth was 250% above those who didn't attend college. On the other hand, those born in the 1980s, it was only 40% above those who didn't attend college. And this gets at the rising cost of college. Because, yes, your income goes up, but if you have so much in the way of student loans such that you can't, you basically end up forfeiting that for the first, 10, 15 years after college, it's kind of like, okay, this might not make sense. And by the way, we're talking about averages here. When we talk about certain fields, it's obviously even worse. The difference in post-grad salary for an engineer versus a music theory student is dramatic. So there's a whole lot that goes into this, but ultimately, this is why I think a lot of Americans are kind of like, hey, I don't know if this makes sense for me because the return isn't quite looking at what it used to be. It obviously varies based on the school, the field of study, and this and that, but the data is fairly conclusive on that front. Let's take a quick break here. When we come back, we're going to talk with Sarah Foster from Bankrate about kind of a related idea. Hey, why is it tougher for younger generations to build wealth, or is it actually tougher for them to do so?
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled, Can You Afford to Snowbird? Mike, one of the biggest decisions to make on this front is, should someone look into buying a place somewhere south, or should they look into renting a place somewhere south?
I'll tell you, it's funny to me, but it's so ingrained in our culture that home ownership is the way to go. It's the way to build wealth. It's just what we've all been trained on. And there are a lot of those benefits, especially for your primary residence. But I frequently see mistakes on the choice of home ownership versus renting when talking about a secondary property. And so there's a number of key factors to ask yourself when you're thinking about going to that second property as to whether you should own or rent.
What kinds of things have to go into that decision?
Well, I mean, first and foremost, how confident are you that this is exactly where you want to be? Because when you factor in the transaction costs of real estate, they add up quickly. And so if you make the wrong decision and 3 years from now you're relocating, it's going to be very tough to recoup your costs on that front. But how long will you be spending during the winter months there? Are you going to be spending the winter months? You can get a great deal on renting if you're on off-season or shoulder seasons. And so that can make things much more appealing. And then just quite honestly, what sort of person are you? Are you going to want to deal with the maintenance on a property that you're only visiting 3 to 6 months a year?
Our guide this month is titled, Can You Afford to Snowbird? And there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Joining us now is Sarah Foster from Bankrate. She's got a piece out today on younger generations and their challenges to build wealth and sometimes the new courses that they're charting in order to do so. Sarah, thanks for coming on. Appreciate it.
Thanks for having me.
So your article starts out by speaking with the Wade family. They're Kentucky residents, family of 6, 4 children, and the struggles that they're experiencing as, you know, very clearly a middle-class type family in just keeping up with the bills and being able to try and afford the same type of lifestyle that their parents had. And I wonder, I guess, what your data says about how younger generations are thinking about their ability to build wealth in this economy today compared to their parents' or grandparents' generations?
Yeah, and I wouldn't necessarily say it's a same narrative. I think what we saw in, our study is this narrative that younger Americans have been talking about all along was really echoed. So maybe this part wasn't surprising. We saw that 38% of Gen Z and millennials say that they feel like they have a harder time building financial wealth than their parents did at their age. I speak to a lot of younger Americans in my day-to-day role at Bankrate, and this is kind of a story that they always talk about. But what stood out to me the most is what they feel like they're having to do, that extra mile they're having to go with their finances than at least compared to their parents to be able to build that financial wealth. And 28% of these younger adults are also saying that they feel like they have to take alternative measures. And it's eye-opening looking at how the economy impacts your personal finance decisions.
Let's talk about those alternative measures, because I'm not sure everyone knows exactly what you're referring to there. But I think the days of the traditional 9 to 5 that many of us grew up thinking about, or our parents' generation experienced, is not all that common these days, and instead people are picking up what's referred to as side hustles. But I guess one of my big underlying questions is, A, am I missing something else? Are they doing something else to try and build wealth, the younger generation? And B, is that truly different from previous generations when we look at that? Or do younger generations just consistently feel that they've had it tougher than their parents' generation, for example?
Yeah, I think the way younger generations that I talk to for this research would define alternative measures is it's the feeling of having to look at your parents' finances, what they were doing to grow their wealth, and then take it a step further and go even farther than they did. And so that doesn't necessarily have to be unconventional steps. We were talking about the Wade family earlier. She mentioned that she wanted to become a homeowner. Her parents weren't homeowners. But that kind of opened itself up to its own financial risk, where we saw in other complementary surveys that we've done at Bankrate that younger generations are actually more likely to face a financial related regret when it comes to their home purchase. And so what I think that shows is that sometimes this historic path to building wealth isn't necessarily the safest, but some of these other alternative measures I think that maybe do differ from older generations is younger Americans are really showing an inclination to invest. That could be because of the decline in pensions, with younger generations maybe feeling like they have to go it alone in saving for retirement. We did also see in supplementary data that younger generations are more likely to say that they're contributing more, not less, into their retirement accounts back in 2023 versus 2022, at least when compared to older generations. In addition to taking on more side hustles than older generations and taking career action, which, could be classified as this question of company loyalty. I think something that these younger generations have faced is two devastating back-to-back recessions that have questioned the reality of how likely it is to stay at a job for your entire career, and does job stability exist maybe the way they thought it did for their parents when they were growing up.
Sarah, I'm interested in one piece you mentioned I'm interested in all the pieces, but in one piece in particular on what you mentioned about propensity to invest in, I'm guessing what you're referring to is equity markets, for example, because even in my adult life, the ease at which you can go and buy a stock or invest in a fund has changed pretty dramatically, not only in terms of cost, but in terms of technology. Are we seeing meaningful shifts in terms of the age at which people start investing and saving for their retirement today compared to decades past?
Well, interestingly enough, we kind of looked at Fed research when working on this study, and we did notice that younger generations, especially in that group of 35 and under, they are more likely than the generations before them when they were that age to say that they're holding individual stocks and to also be investing for retirement. And it could be directly attributed to, the decline in pensions, but also this democratization of investing. It's a lot easier in this day and age to invest now than it was, 10, 20, 30 years ago. But I think what is also kind of standing out here too is that younger generations are seeing this new environment and what this new environment of wealth building looks like. and they're adapting. We saw that about a third of younger generations say that they wish they knew more about investing as a path to grow wealth. So I think what that's indicating is an interest. And so whether you want to maybe attribute this maybe widespread feeling among the generations to broadening technology or the ease in which how much
Sarah,
easier
we've got to run. I apologize. I'm going into a hard break.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing and Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing and Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, on this date in 1985, Bruce Springsteen's Born in the USA reached its peak as number 9 on the Billboard Hot 100 charts. Bruce Springsteen has had many hit songs over the years, but none have ever reached number 1 on the Billboard Hot 100 list. Trivia question today. What was Bruce Springsteen's highest charting song on the Hot 100 chart? Once again, what was Bruce Springsteen's highest charting song on the Hot 100 chart? Be the fourth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Let's talk about a little aviation news. Video yesterday from Miami International Airport shows a Boeing 747-8 cargo plane that was taking off heading for Puerto Rico, having to divert back to Miami International Airport because it looks like they had an engine failure that resulted in some fire coming out of the engine. Now, again, these things do happen on planes. We've seen the videos of, sometimes passenger planes where, they've been inside after this has happened, and the engine has, kind of decomposed, basically. But
timing ain't good.
No, well, it's not. Now, the engines are not made by Boeing on these planes.
It's a 747, not a 737 MAX.
Yep, the engines are made by GE. So, again, who knows? We don't know what the problem is. We don't know if it's related to GE's build of the engine. We don't know if it's related to maintenance that was not done on the engine in an acceptable manner. We don't know if it's related to something else on the plane that caused the engine to fail. We have no idea. But this stuff does just keep popping up with Boeing, doesn't it?
It certainly seems to be, Chuck. Folks, I don't know about the rest of you, but it's only mid-January here, and I'm already just itching to get out of New England. I've only had to whip out the snowblower twice at this point, but nonetheless, I'm ready to make a move, and I certainly think that I'm not the only one. If you're heading towards retirement or maybe still quite a ways away, but trying to plan out where your retirement years are going to take you. Maybe it's full-time, hey, I'm getting out of New England. Maybe it's I just want to spend some time of the year somewhere a little bit nicer so that I can still have my attachment to my New England roots or my Northeast roots here, but spend some time in Florida or Arizona or like one crazy group that I know, more time in Alaska because that's our real passion project. We've got a brand new guide out this month about snowbirding and the idea of maintaining a couple of properties or renting a couple of properties, and what are the thought processes that need to occur before you evaluate the decision of spending more time elsewhere. Are you going to be a resident of that new state? Are you going to keep your residence here? What are the potential tax benefits and detractors of one decision versus the other? If you have questions like this and are trying to evaluate whether or not it's the right time for you to spend a little bit of your winter months somewhere else, give the Armstrong Advisory Group a call and request a copy of our brand new guide about snowbirding by calling us at 800-393-4001 to request your new free copy of our guide on Can You Afford to Snowbird. Again, that number is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Chuck, at the very beginning of the show, we were talking about college education, or very beginning of this hour, we were talking about college education, and I couldn't move on until I voiced one piece about it. This Wall Street Journal article, which, again, in a lot of ways, I think does a good job of identifying a lot of the problems with American universities today and what has changed over the last 40 years. No doubt about it, and I think one of the biggest pieces that we didn't even talk about is the fact that of 100 random freshmen enrolling in college today, 40 of them will not graduate. And if you look at the data on average pay for those with some college but no degree compared to those with high school, it's almost no difference. And that is, to me, one of the single biggest problems here is that, 4 in 10 out of people that are enrolling are not finishing their degree. However, for the Wall Street Journal to write a 7-page article about why Americans have lost faith in the value of college and not a single time bring up income, to me is a little bit disingenuous. And yes, there are problems with American colleges, and I think very clearly the value of it has deteriorated over the last 40 years. However, if you're going to write a 7-page article about the cost and Americans losing faith in the value of college and not point out that those with a college degree today earn median income that is 60% higher than those with just a high school diploma, that to me is a little bit disingenuous. Yeah, the value has deteriorated. The cost, in my opinion, is way too high, and the way that they run a lot of these institutions is probably not the best way to do so. But I think that risks the danger of losing sight of the fact that earnings potential for those with a college degree, even today, is significantly higher than those without a college degree. So
what was the school? Was it you?
Go ahead.
Sorry, go ahead. What was the school? I think it was either University of Oklahoma or Arkansas that was buying the Italian chapel to convert
Italian
into
cathedral.
dorms.
Yeah, something along those lines. I don't recall. So we should, and everyone does, criticize the waste at a lot of these universities, and I think there's a lot to be modeled after other countries and how they approach higher education. There are parts of Europe, for example, where it's not about getting a well-rounded education. It's about you're going to decide what you're going to do. You're going to take these standardized tests, and that's the type of education you're going to get to specifically, work in a biolab, for example. And I think there could be some justification for that type of education model in the United States. But you cannot talk about any of that stuff without also talking about the earnings potential that a college degree still affords you today in the United States. So, anyway, that's my last piece on it, because that was just... I kept looking at it, like, where is the mention of income? Where is the mention of income? And they just completely ignore the fact.
Yeah. Let's talk a little bit about Spirit Airlines. They've been on quite the roller coaster this week. Today, back up 23% after they announced that their revenue is going to come in at $1.3 billion for the quarter, at the high end of their earlier forecast. They're also saying that their estimated adjusted negative margins of 12 to 13% are an improvement from the previous forecast of negative 19%. We're not going to lose as much money as we thought we would.
Yeah, I mean, this all comes on the back of the judge shutting down the JetBlue merger, obviously, in which I think the stock tanked 50% in a single day because, again, this is a company that has not been profitable in a business that generally, again, volatility in terms of profitability, but, generally there's an expectation that you make money on, flying passengers across the country, and they have not made money since pre-pandemic. It's tough for me to envision how this company continues as a standalone in its current structure without having to do something in terms of its debt or in terms of how they operate right now. Without a merger with JetBlue.
And here's the thing. And here's the thing, Mike. For all the talk about, they haven't really been profitable since before the pandemic, profit can be manipulated through accounting.
Sure.
Free cash flow can't be.
Yeah.
This company has only had 2 quarters of positive free cash flow since Q3 of 2014. That's 2 out of the last 40 quarters. This is their business model is not viable. Let's call a spade a spade. This wasn't a company that was, torpedoed by the pandemic.
No.
They were free cash flow negative from September of 2014 through September 2019. 5 years in a row that they did not have positive cash flow. This is not a company where the pandemic killed them. They were dying anyways. And so I look at this, and they probably always needed some kind of merger to live because they just can't make money with their business model. I guess the other companies, Groupon's still in business, but it's like the Groupon of airlines. I don't think you can make money like this. And I don't think you can. They haven't been able to. They had 3 years of profitability as a publicly traded company, 12, 13, and 14. Not profitability, but positive free cash flow. Ever since then, haven't been able to do it.
In the toilet.
So it's been not good. Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica. We're going to talk a little Taiwan Semiconductor when we return.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
All right, as promised, we're joined by Paul LaMonica, and we're going to talk a little bit about Taiwan Semiconductor today. Paul, how you doing?
Good, thanks. How are you?
Good. So Taiwan Semiconductor comes out and announces their outlook on 2024. What did they say, and what was the market response to what they said?
Yeah, they said that they expected revenue to be up, more than 20% this year, which is, obviously pretty good news for a company of Taiwan Semi size. This is, one of the world's leading chip foundries making semiconductors for large tech firms like Apple and Qualcomm and Broadcom, Advanced Micro Devices, NVIDIA, et cetera. But what I think really got investors' attention was that the CEO sounded incredibly bullish, unsurprisingly, about chips for AI. And that is, an area that continues to boom. We all know how NVIDIA's stock surged last year on the back of this AI hype. And I think that that's a trend that's not going to end anytime soon.
Yeah, how does Taiwan Semiconductor benefit from that? Because I was under the impression that most of the manufacturing they'd done was basically contract work to produce not lower quality, but less complicated chips for mass purposes, cell phones, cars, things like that. Are they in a position where they're doing direct design work for AI chips, or is it just kind of a rising tide lifts all boats?
It's more the rising tide lifting all boats, given how so many of their customers, NVIDIA and AMD in particular, have this exposure to the AI trend. That is obviously something that is helping Taiwan Semi. I think what's also pretty fascinating to see is Apple stock got a really big boost on the Taiwan Semi numbers yesterday. Apple is by far the biggest customer for Taiwan Semi, and I think a lot of people are waiting for Apple to launch an AI-enabled iPhone, especially since we now have Samsung doing that with the Galaxy. It's no secret that the world of smartphones, it's really about copycatting features. One company may have something that's innovative. It's not innovative for long, because if Samsung does something, Apple's going to do it, and vice versa.
Did they give any information regarding the construction of their factories in Arizona in the U.S. and how those plans were progressing at the moment, or no information on them?
Yeah, I didn't really dig into that for this particular piece. It wasn't really germane to the story I was doing about the kind of boost from AI, but that obviously is an area that a lot of people are continuing to focus on. And I think politically, especially as we head into the 2024 election cycle, there's going to be a heavy focus on jobs coming from overseas back to the U.S. So I would imagine that if they didn't talk about it yesterday, it's something that Taiwan Semi will address in the coming months and quarters.
When they talk about the areas where they're seeing the most potential growth this year, do they give any guidance? I know we talked about AI there, but are they seeing a rebound in, autos? Is it in phones? Or is it just kind of everything is moving in that direction?
Yeah, AI was obviously the big driver. I think autos is an area that we're seeing a lot of interest in as vehicles, increasingly have to have more and more chips, given the advanced features that many vehicles, both electric vehicles and old-fashioned gas guzzlers, have these days. The PC business is one, I think, where there is still concerns about demand, but I think that is an area that could be one that grows. And smartphones, I mean, obviously that's something as well that there are some worries that Apple iPhone 15 sales haven't been as robust as people hoped, but the numbers from Taiwan Semi, given that Apple is their biggest customer, maybe we're going to get a surprise from Apple in the coming months, and demand is stronger than expected for the smartphones, even though the narrative is quickly shifting to the VR headset. I think the Vision Pro for Apple is a potential driver of that stock.
Very good. Paul, appreciate you joining us today. Thank you so much for the time, and we will catch up with you next week.
Have a great weekend, guys. Thanks.
That is Paul LaMonica, contributor at Investor Place, talking a little bit about Taiwan Semiconductor.
All right, before the show wraps, want to pay off our trivia winner, which was for the question, what was Bruce Springsteen's highest charting song on the Hot 100 chart? That'll be Dancing in the Dark, which came in at number 2. And we have a double winner this week. Winner today for the Financial Exchange Show t-shirt and the $100 weekly gift card winner for Applebee's was Matthew from Enfield, Connecticut. So congrats to Matthew there. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, what else you got for me?
Your new $3,000 couch might be garbage in 3 years.
What?
Yeah. For me, it's because my daughter draws a pie using a ballpoint pen on it, as we discovered last night. But for all the rest of us, apparently the quality of just couches and home furnishings has diminished. Now, I think we all know this when you buy like a particle board piece of furniture. But even with higher price points these days, people are finding, and professionals are saying that, look, the construction quality is just not there, and these things are just deteriorating pretty quickly. Part of it seems to be a response to consumer demands, which is just more and more fast fashion and consumerism, where people don't want to hold on to couches for 7+ years. But I'll tell you, I'd be pretty pissed if I bought a $3,500 couch and the thing was garbage in a couple of years.
Well, I got to say, we always talk about the problems with big tobacco or big pharma or this and that, but
Big couch
is the real problem, it seems. That'll make life literally uncomfortable for you.
Quite.
Markets remain in positive territory, flirting with all-time highs on the S&P 500. Dow's up 112, S&P up 19, NASDAQ up 85. We're done for the day and the week. Have a great weekend, stay warm, and we'll see you on Monday.